Okay, hi there guys. G'day Andrew, how are you mate? Just let me know if you can hear me okay. And we'll get started. Who else is in this morning? Great. All right, looks like we'll see how we open today, but not a big night on the US, in the US on Friday night. Hope you all had a good weekend, by the way. Nice time to relax. Enjoyed your weekends. Down here it's been pretty wet over the weekend, so sort of kept us indoors a lot of the time. Other than that, it was actually time to relax. Did a bit of work yesterday, so not too bad. Flick through a few charts and bits and pieces. So good time to do it when you've got not much else to do. Um, so Friday night, we'll just quickly tick over that. They had, by the way, anyone that doesn't know, they had data out in China. I think it was yesterday or the day before. Not quite sure, but it was over the weekend when the markets were closed, showing slowing growth over in China. So it'd be interesting to see how we take that as China slows one of our biggest export markets. Um, see how that may affect sentiment in our market. US on Friday night. So what I think the market's been sort of buoyed by is obviously jobs, your bits and pieces out in the US, which haven't been too bad. The labour market holding up. Obviously got a few issues with manufacturing, which we've mentioned. But what they're sort of looking at is, basically the consumer to buoy the market, buoy the economy, continue to spend. Now, the jobs rate stayed at 3.7% unemployment rate, sorry. They didn't put on as many jobs as what they thought. So it was below consensus, which sort of was a bit of concern over there. I think what they did focus on, one of the positives was wages growth has gone up. So sort of like, okay, if we're relying on the consumer, then that's a good thing. They've got more money to spend. They continue to spend, continue to support this economy. Um, So yeah, all in all, it did pause the market because the labour market is the biggest thing they're focusing on. As long as we've got a stronger, well, as long as the US have got a stronger labour market and they're ticking along okay, that's going to be supportive of growth, blah blah blah, and so on. Now I was just listening to something, just probably 20 minutes ago on the US and their economy, saying that just corporate debt over there is just massive. So even to stimulate by cutting rates, you wonder how much more debt they can take on for growth, and you know that will come to an implosion level at some stage. So that the market may be starting. We'll see if it starts to focus in on it once we look through some charts a bit. But yeah, not a big night. Was it Nasdaq was down, the Dow was up, the broader market S&P was up slightly. So all in all, relatively flat session considering the previous session. I think on the Thursday night. Now we've got FOMC is next week, and not much has changed on the rate cuts. They're expecting a rate cut on, I think it was a Thursday night, so it'll be early hours of Thursday morning for us when they cut, well, when they potentially cut rates. So bring out that, but it'll be the statement they're looking towards from Powell. Just to see what he talks about. He talks up about the economy. Now he did talk on 2:30, I think, in the morning our time on Friday night or Saturday morning. Did say that he expected modest growth um, globally and in the US, which sort of negates the thoughts of a recession. Now that's at odds because the bond market, that bond market inversion, which tends to lead a recession, is the big thing at the moment, and that's what the market's saying. So it's kind of funny that the market's saying one thing, he's saying something different. And bond yields did drop on, which I know they've rallied the last few days when they had a good pop. You had things like Brexit, uh, what do you call it? A no deal Brexit has sort of subsided, or the potential for a no deal Brexit has subsided. China came out with some stimulus packages in the US. I can't remember what else happened over there. And the talk of trade deal, they're going to have high level talks sooner or later. It's always buoyed the market, and that's where you got yields that have bounced. It's more of a bounce from low yields. than anything else. And now yields are starting to edge lower again, or they did on Friday night. So there's still those risks there that this market can have a sudden correction lower, but at this stage, it's still going up. I mean, this is the ASX. We'll quickly look at that. It's, we got this sudden press lower after a big grind high pretty much since December. It's the first sort of decent correction they got, bounced off the MAs. It was the first time it sort of got through. It has bounced off a couple of times. If you can just drill in on that, bounced off a couple of times, prior, and then got bought back up. So that was, some really nice little buying opportunities to grind it up to the all-time highs. And that's where, once you got this big bounce and you start to sit back on top, that's where we're gunning for the all-time highs, which we got this week and finished below. So not a great sign. And that's why we got the sell-off. But that could be, you can attribute that to the fact that it just pushed through the all-time highs and there's going to be some sort of reaction off those highs. That's fine. You got that reaction. And whether or not now we're going to start to base, I would expect that's going to happen some sort of more serious base, whether we get this type of thing, a bit of a sell-off like that, push through and start to lift again and build for a push back up through the highs, or what, who knows. But that's the bullish case. The bearish is this, that we just roll over. And we're still, momentum's slowing up here. There's no doubt about it. You can see on the MACD. Is it MACD? Yeah, MACD up here. Momentum seems to have been slowing. Stochastic sort of going from overbought to heading towards oversold. We've got this little bounce. We could easily turn around and take out that 6,400 level, depending on what the US does. Now the daily is not looking too bad. It's had that sell-off, and it's taken a bit of energy just to buoy that market and start to edge higher again. And it got through 66. It finished above there on Friday. 6,600 level we're looking at, which is not a bad sign at all. But it is extended up here. You can see it's extended. Last time we were up at all-time highs, nearly 6,900 when we're extended. Now we're extended again. And look at the momentum. Generally, what we tend to look through, you get sort of that push through the zero line from positive to buying momentum to selling momentum and pushes through. Sometimes it can come back and roll over. You got it last time we got that type of action is where we got this big sell-off coming into December. So I'm not saying that could happen, and sort of things are lining up exactly the same. Apart from price action looks more buoyant, whereas this price action was a bit of a grind. It basically pushed up to the MAs and sat below and could roll over from there. But you see the stochastics, the buying pressure was quite high. It didn't get very high. We're in a similar scenario comparative to the highs up towards 69. It's taken a lot of energy to go from these lows, 64, back up to the highs. So it's just whether or not it gets capped up here. Momentum is edging higher, but it could easily stay below the zero and the sellers start to pile back in, like they, exactly what we saw here. It's starting to come back to the zero, and then we get some selling pressure come back in. All this is, we have to wait and see. I mean, there's no need to be too, I'm not going to be overly bullish in here. Again, we get some setups, we have to take them because the market is edging high. You don't know if it's just going to keep ticking higher. And that's the time when people expect the worst, the best can happen. And if the consensus is that it's going to be a bit of a sell-off and it's not, and it starts picking up, there's going to be a lot of people chasing the tail and try to chase this market higher. It could easily, and that sort of scenario could easily play out. It's sort of, the markets normally get caught out hard is when it's the unknown. And at the moment, it's one of the biggest pullbacks that's ever talked about at the moment. The US, when's it going to fall away from the highs? The debt levels, all these sorts of things have got the fear going. And we've had that sell-off and it's been supported. The market's coming back in and supporting it. So let's just take a look at the SPY at the moment. So the SPY open touched these highs. It's still within where it closed on Friday. We'll just keep an eye on that for a second. It closed at, around 68.34. It's around 66.34. It's around 66.30 at the moment. So we'll see if this produces a lower high. It's just that retest of the low, the high. It was coming into the close anyway, so not significant. See if it can wash out this low. We'll just see what happens at 66.20. It's only about 10 points away. If it washes it out, because for me, the anchor is at 65.86. So the market's sort of pressed up. First sort of correction, we can get that lower high come into play and get these two moves down on the 30-minute chart. And then to start to be buoyed above the anchor, which is a positive, and start to get buoyed and start to lift again back up through 66.50. But that we'll just have to see. That's going to probably take longer than just today, but we'll see what happens on the open. So not much on the open. We don't seem to be worried too much about what China's growth is slowing. It's probably expected. although it was below consensus. Let's look at where the US, all the overall markets are. That's what we want. So this is the Wall Street. We mentioned this before, it's sort of liquidity zone where it's touched up, pulled back, got back up there again, pulled back, got through, got supported, pressed up, had another liquidity zone right up towards the highs. Then it rolled over. So when it rolled over, it comes straight back down into that original liquidity zone. And that's around where we are now on the Dow. It bounced off there, went straight back up again, found some more selling, just basically pierced through from there. But this is the first time we've been back up towards that liquidity zone since, when was that? Start of August. So we've seen this big sell-off. It's been buoyed. We've got high, low in here. We've got higher lows holding. So this leg up is holding. One thing I just did draw up was, if you're looking at that's the initial leg up, and you project that out, that's taken us right back up here. So really that could go another 400 points back up sort of those and retest the highs. We'll have to see whether or not, we do spike up to those highs another 400 points, or whether this market just starts to have a bit of retracement. Now, if we do roll over from here, it doesn't mean the world's burning or anything like that. It could just mean another pullback like this, leg up, pullback, leg up, pullback. And that's just a standard practice on a solid move up. What we'll have to do is see how it actually reacts. If it's controlled like this, there's a bit of bearish talk, through here, but that was well and truly controlled off the highs. That's different. That's more bullish to me than just, falling off a cliff like we did there. If we fall off a cliff and react and then consolidate and then maybe head south again, yeah, that's a lot different. But yeah, it's what we're talking about. You've got Powell potentially he's going to cut rates to stimulate. So you got US probably going to stimulate. Well, they're going to. Europe are. China is. You've got those sort of stimulus that, whether or not the market's factored it in or where they're going to factor it in, we don't quite know. They're expecting stimulus to support the market, but I'm always going to argue, why would you stimulate something if there's no need to, if it's really strong, if you're not scared about slowing growth and all these sorts of things. So the market's probably going to come to terms with that sooner or later. That's the Dow. So what we're really trying to pick is, I'm still bearish overall, and maybe I'm trying to steer clear of being bearish because of what I think. And I'm not an economist. I've only learnt along the years reading bits and pieces and trying to learn how the market reacts to different things and why and stuff. So I'm not an economist, but I'm trying to read into it. So I could be completely off the mark. But what I feel I'm better suited at is just watching what the action's doing. So I'm trying to steer clear of letting my bias predict what I'm going to do, and just try to see what the market's doing and get an idea of what could happen. I don't know whether it's going to continue on up. If we continue on up, potentially is a target 400 points high on the Dow. If we roll over, there's a good chance that we could roll over from this liquidity zone and push down. But that's, we've done this before, rolled over and got bought back up again. So all you can do is from here is plan out what you want to see if you're a bull, holding higher lows from here. Okay, if we take out that high, maybe we're going to continue to trend up and extend this leg up a bit further, which you can easily do. Anything's possible, really. You just got to plan what you want to see for sort of different scenarios and what you're going to do and how you're going to react. That's the broader S&P, and you can see that that's not an ideal liquidity zone. Like, it's touched up on this zone before, got sold off, traded around, above and below sort of that zone there, finding a bit of selling up the top, bit of buying to support it, pushed it back up and out, had a bit of a sell-off, come back down to that liquidity zone, got supported in there again, pushed back up to the highs, again, pulled back, supported in that zone again, right back up to new highs, and it's just like the Dow. When it got sold off, it was found some sort of reaction in that zone, that liquidity zone, bought back up, and then the selling just come back and pierced straight down and through. Whoops. When we sold off at the start of August, I think it was. Yeah, start of August, just got knocked on the head there. And the same sort of thing as what we just spoke about, the Dow. This leg up here can continue. It looks like it's getting heavy up here, and it's got to be some sort of distribution, which could be happening. Distribution, the way of buyers just getting out of some of these positions. And what we'd be looking for from here is, if it does spike up through these highs and come back in, then I'll be looking for some sort of corrective action lower. And then I have to gauge, we're just going to have to look at it and gauge what we think is going to happen if this pullback starts to play out. If it's more controlled, maybe come back and test 29.40 and then start to pop again. back up into all-time highs. Germany, similar type of thing, a good liquidity zone through here. It's around, say, below 12,250. It's right up there now, so there could be a reaction lower out of that zone. You have to wait and see, but good base that's built up like everything else. Wall Street, SPY, UK doesn't look quite as healthy. I don't like the fact that it's got popped up straight back down to that 72.40 level. You can see here. Whoops, if we can see it, popped up, got sold straight back down. So potentially that could be making a lower high around that 73.06 mark. Again, we're just keep an eye on it. They've got Brexit issues they're going to be worried about now, whether it's going to be a hard exit again or they're sort of the pressure's coming off a hard exit, which is great. But we'll just see what happens there. Spot gold. Yeah, spot gold, there is potential for a lower high that's holding at 15.27. We'll see if some buyers can step in here. They spiked it down once, stepped in, popped back up, tried to go down, just got through. You can see this low at where it is pretty much now, 15.06. Bounced straight back up again, and then had some heavy selling. Pressure straight back into that zone. So whether or not this is going to be a zone where they're going to start to protect, or buyers are going to start to step up and start to lift it from there, like we saw this sort of thing, press it down, but it kept getting bought up through 14.92. Whether we get something like that, and that's going to be a higher low start to build above 14.92, or whether it's just going to pierce straight through. If it starts getting through these lows, and especially if we do something like this, we've got, we bounce back up, we get that sort of reaction back up, and it starts to get pressure again. We don't want to see this. Some lower highs starting to form below sort of this level, below that. What's that? Well below 15.28. Get some lower highs, then I'd expect to be a bit of a stop run, which is going to trigger that move down to 14.92 and potentially through. Yeah, look, it could be. I don't know what seasonalities are on gold. I just take note of what I'm seeing at the moment. So I mean, it could be that sentiment, but maybe the bullishness has already happened. You got to remember where it's come from, I guess. We've had this sort of move up there to just that seasonal buying into gold, potentially, yeah. I mean, who knows? It could just stop it from going down. It could just go sideways. But yeah, the chart to me looks like there is that potential where you get held up here, and there's the potential because if you can see, we've had that move down, pop back up here, sell down, straight back up. So whether we start to lift like that, I mean, it's yet to be seen just yet, but you can see this action. This took out the low, straight back up. That savage move back up, which took out, so 15.20, which is the anchor of the move down. It could be the early signs that this is going to start to be basing above 14.92. Just have to keep an eye on it. All right, let's just quickly see. Yeah, Indian buying gold. They love it, don't they? They're going to buy less of it, aren't they? It's too expensive. What am I looking at? Aussie market. So it's gradually edging down to test this low, 66.20. We've got the ASX is down 9 at the moment. So it's down a little bit more than I thought. I thought it might have been opening down about 5 or so points. We'll just have to see if this can bit of a bounce. There may be that we'd be capped a bit by China news outs on over the weekend. Let's just see. If you go to the 30-minute chart, it looks like it's at a top. Last time it was at a top. We had a bit of a sell-off over a couple of days. Potentially we're going to do the same thing. Same sort of thing up here. Had a bit of a push up above the MAs. We come back down. We either retest just below, start to find some buying here, but we're going to get that pullback or a sell-off just to clean out a few of these buyers. We'll have to see if that can play out. If that's the case, we could be coming back down to test 66 just above and below, chop around there for a while before we lift, if we're going to be a bullish. Otherwise, we just have to keep an eye on how hard, if this does pull back, what sort of reaction the buyer is going to put in. All right, that's probably all we really need to look at the moment, guys. We'll keep an eye on the SPY. Just go to the 5-minute chart. And on intraday, it's in a decent enough zone to lift here. Just wait till we get through that 10, 15, 20 mark. Once the market's open, to see what the SPY does, which sort of direction it starts to pick, and then base yourselves from that. I mean, like I said, if we get this deeper correction, got that move down, pop back up. If we've retested this high and we start to get that deeper correction, we could find 66.16 could provide some support, or zone through that 66.20, which is only about 8 points. We traded down there, reacted back off. If we could grind down there and see if that provides some sort of buying opportunity off that zone, off this liquidity zone through here. Yeah, that's just in there, or whether we're going to trade down to 65.86, which would probably be quite a half decent sell-off. What are we now? That's about 40-point sell-off potentially, a 40 or 50-point sell-off if we get down to this low. So, sort of looking at this as potentially a bit of a buy zone where we could start to lift, or even if we're sort of ranging between here and these highs up at around 66.39, and you're sort of just trading the edges if it starts to play out that way, but we'll just see what happens. All right, guys, thank you very much for joining me. Newcrest XDiv, let's have a quick look. Yep, I think it was today. It's XDiv anyway. Newcrest. Record date, X date. No. 22nd. There you go. 22nd of August. So. All right, guys, we'll call it a day there. We'll be back on at 12:30. And must be XDiv today. It's smacked, isn't it? It's shown on the daily. All right, guys, thanks for joining me. We'll speak to you again at 12:30. Cheers, guys. Bye.